As of right now, exchange-traded funds are not included in the SEC's circuit breaker program that began on Friday. Remember, ETFs got hit the hardest during that flash crash, so should investors and the fund companies that sell ETFs be worried? Suzanne O'Halloran is working this angle for us. Suzanne?
You know, Scarlett, it may seem like a massive oversight, but what we've learned is ETFs will be included. It's just taking longer because these products are a little more complicated than single stocks. Jim Ross of State Street, the second largest manager of ETFs, told me testing is underway.
It's our understanding that ETF will be added to the circuit breaker system in the next phase. Don't know the exact timing on that, but it's from the information we've received, we're expecting somewhere between 200 and 250 ETFs to be part of that initial test phase.
And the NYSE trades about 80% of listed ETFs, so implementation has to be tested at the exchanges before it can be officially rolled out. Until that happens, Scarlett, ETFs will still trade even if circuit breakers kick in at the stock level. This is very worrisome to big mutual funds, including Vanguard. Plus, Charles Schwab also understands retail investors may be worried as well. This morning, Schwab announced plans to cut fees on 6 out of its 8 ETFs. Scarlett?
And Suzanne, have investors pulled back their ETF investments over the past month?
Not really. Investors poured about $7 billion of new net flows into ETFs, according to State Street during May. The Spider Gold ETF saw the second biggest month on record, $4 billion of inflows. This is a top holding of billionaires George Soros, John Paulson. Investors also added to the S&P 500 ETF. The data for June will be more telling, Scarlett, because it does include the escalating situation in Europe and here at home in the Gulf.